In my view, Bitcoin could easily go to 400 here, and then 400,000 a coin, and then it could draw down 50% to 200.
Lawrence Lepard opens by emphasizing a fundamental truth. Bitcoin is a commodity, but a radically different one, unlike traditional commodities like oil, gold, or wheat, where rising prices lead to increased supply. Bitcoin breaks that dynamic entirely. No matter how high the price goes, the supply remains fixed and predictable. There's no ramping up production, no planting more fields, no drilling more wells. Bitcoin turns the old model upside down, and that's what makes it so powerful in a world defined by monetary manipulation and supply elasticity.
And before that, be the one who says, I was here before 100K. I'm on a mission to hit 100,000 subs before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comments. Let's grow and win together.
Well, certainly as a commodity, if you define Bitcoin as a commodity, and the SEC has and others do, because a digital Bitcoin, they're all fungible. Every other commodity in the world is subject to the law of supply and demand. And so if, for example, let's take some other commodities. Oil's a commodity, gold's a commodity, wheat's a commodity. If the price of those items goes higher, then there will be incentive for people to drill for more oil, mine more gold, plant more wheat, and that'll bring the price back down. This is the only commodity, it's really the first and only commodity ever that has a completely inelastic supply curve, which is to say, it doesn't matter what the price of Bitcoin is, they're not going to be more than 21 million of them. And so that's another thing, a point I would try to make to people looking at this. It's very hard if you look at it in investment terms in the old model. There's never been anything like this before.
Yeah.
Okay. Which is why, by the way, it's outperforming everything else, because there's never been anything, and there probably won't be again. This is a scarce commodity with a completely perfectly inelastic supply, which is why the price can actually ultimately become infinite. I think one of the great challenges of Bitcoin is custody.
Yeah.
As we all know, how do you own a Bitcoin? You have a public address that anyone can see, and if you give somebody your public address, say this is mine, they can look at it and say, any computer anywhere in the world can access a public address. Say, there's one coin there. That's what's outward facing to the world. What's inward facing is you have your private keys that allow you to access. The ownership of that is really
the true bearer nature of it.
The true bearer nature is having the private keys, which used to be a string of 256 characters, and now has become 12. Because of BIP 39, has become 12 or 24 keywords, which in order will recreate that string. And but that's a tricky process. Having a wallet and knowing how to do that is not for the technologically inexperienced. And so and this, by the way, is why the ETFs are such a big thing. That this whole custody problem gets solved at a certain level, for people who don't want to own their own coins and keep their own keys. But these keys, this private key, this is like the nuclear code.
Yeah.
And I think all Bitcoiners have probably lost a private key at one time in their life. And in early days, and people were more casual with them, and if you lose the keys, you lose the coins, and they're there. So there are 21. It's true though, there are 21 million Bitcoin outstanding. Some of them are actually not accessible. It's been estimated that between 5 and 20% of the coins in existence, the keys got lost somewhere. If you recall, there was a great story of some guy in England who was trying to get the rights to dig up his computer, which was in a landfill. But the point is that look, you don't get this digital scarcity without the incredible responsibility of managing your own keys.
Yeah.
And that for some people, that's very, very scary. Well, in my view, Bitcoin could easily go to 400 here, and then 400,000 a coin, and then it could draw down 50% to 200. We live in a system where we're one step away from the government grabbing your money. And that's the beauty of Bitcoin, right? If you have your keys, the government can say, give me the money, but you can say, sorry, I'm not going to do that.
Or I lost it, or I don't have it, or the password's gone, or I hit my head. Or
it's independent money. That's you're totally self-sovereign is what we like to say. And, and that's a really big deal if governments become abusive, right? Talk about governance and core developers and changes and how, really no change or upgrade can be made without a consensus of the miners and the nodes accepting the new change. And since everybody who's in it has a vested interest in seeing it continue to work and appreciate and value, I think that's a very strongly built-in, protection mechanism against a malicious change of
Absolutely.
any sort. I always thought that there were two major risks to Bitcoin. The first was that the technology was not sound. And now 16 years in, 890 some odd thousand blocks, I'm less worried about, knowing how the core developers operate, et cetera. Although this op thing bugs me a little bit. But so I always was worried the technology wasn't sound, but time and history and blockchain wars, all that stuff, it got me comfortable with it, or block size wars. The other thing I was always worried about is adoption going to continue? I mean, as the Austrian model says that money is what we all agree is money. Well, if everyone lost interest in Bitcoin, or if something better came along, then Bitcoin would be at risk. But what, there are metrics you can look at, hash rate, users, wallets, all kinds of things. And what I was very pleased to see over all these years, they just kept growing.
Yeah.
And so as long as it kept growing, then this is what in the venture capital world and in my book, I said this is, what we used to call dogs eating the food. You know what I mean? I mean, is there real evidence that people are using the thing?
Yeah.
And as long as that evidence is growing, stay with the trend.
To help make sense of this unique market dynamic, Lawrence Lepard introduces a risk score, a liquidity-based metric that ranges from 1 to 5. This score serves as a gauge for when the Bitcoin market may be approaching overheated territory. Reading above 4 doesn't guarantee a peak, but it's a signal to consider taking some chips off the table, not necessarily a cycle top, but possibly a mid-cycle pause. Lepard compares it to the RSI indicator in technical analysis and overbought. Reading doesn't always mean a reversal is coming, but it provides crucial context for managing risk and positioning.
We're just at the inflection point where it's about to really go mainstream. I mean,
that S-curve.
5 or 10 years ago, nobody knew what Bitcoin was. 5 years ago, some people knew what Bitcoin was. I would say now most of the world at least knows or has heard of Bitcoin. It'd be hard to live in this world and not know what it is. But that doesn't mean they bought it. I mean, I was watching a show last night, and there was some politician who said, well, at least this thing's not a Ponzi like Bitcoin. I thought to myself, oh, God.
Yeah, we're still so early.
People just don't get it yet.
Yeah. In my analysis, global liquidity goes up by 1%. Bitcoin usually rises about 7%. But in these particular regimes, that goes to 20 to 30 times. So a multiplier of 5. And what's really interesting is that we got the breakout in global liquidity in early April as the markets were sort of tanking. So that was this low that we went through, which really wasn't much to worry about, like in terms of Bitcoin pullbacks, but it felt pretty nasty at the time. Massively outperformed the S&P, massively outperformed the equities on a volatility adjusted basis, even though, it was down 30% and the S&P was down 20%. On a risk adjusted basis, massively outperformed equities. And so when global liquidity broke out in early April, Bitcoin rallied 40%. Global liquidity from that breakout is up about 2%. That's roughly what it has done in those previous bullish regimes where global liquidity breaks out to new all-time highs. You get a sensitivity factor that is multiples, factors higher than it typically is. And so for me, it's interesting that, we're not overbought, based on liquidity. Every new dollar that's created, whether it's even through like the US dollar weakening or depreciating is an easing on financial conditions, it all adds liquidity into the system or makes financial conditions better, and the relationship is strong. And so, I'm looking at now a market that is not overheated at all. In fact, it's doing what it should be doing, and it's not doing anything excessive. So I talked about a framework for sort of modeling the risk. What I did was I converted that relationship into a risk score. And the risk score for global liquidity is just this one here. It correlates pretty well to the tops in Bitcoin. So what you want to see, it's a rating system of 1 to 5, but I've also got percentiles, and we'll be publishing them onto the RV platform. So if people want to get a little bit more granular, like if we're at a 4, does that mean we're at 82nd percentile or the 88th percentile or the 90th percentile? We'll get that granularity shown as well. But what it's designed to do is to say, okay, anything below a 4 is sort of just neutral, normal conditions. When we're at 4s, you have to start thinking about, okay, if there is chips to be taken off the table in Bitcoin or crypto.
And this is not necessarily the full cycle top. It can be sub cycles within, right? Because I'm looking at got to 5s a couple of times. backs off again. So you kind of use it like a weekly RSI kind of idea, is like an overbought, oversold indicator.
Yeah. So what you said is like perfectly correct. It's like you've got to use it with some context. Like an overbought RSI at the beginning of a breakout of a long-term downtrend is not a sell signal, it's a buy signal. But this is a little bit more calibrated to knowing when things are really stretched relative to the one the one statistical relationship which really seems to matter, which is liquidity. So if it becomes extremely stretched versus liquidity, even in a mid-cycle scenario like we saw in early 2024, so we got that read when Bitcoin was around 51, 52,000. It topped, within a week or two at sort of 73,000. So it doesn't catch the top. None of these are going to catch the top, but it tells you when global liquidity,
Ultimately, what Lawrence Lepard and Raoul Pal make clear is this: Bitcoin's fundamentals remain rock solid. Adoption is accelerating. The macro backdrop is increasingly favorable, and no other asset offers the same monetary properties in a world where governments can freeze accounts or quietly erode savings through inflation. Bitcoin introduces something unprecedented: true sovereign ownership of your money. The next move is critical. Click this video to stay ahead.